Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, after a wobbly start, Yatin, we managed to do well, and we reclaimed that 23,300 mark. In fact, the Nifty came very close to that record high level as well. But we trimmed most of the gains in the second half of the session. In fact, we just about managed to end marginally in the green for Nifty, and the Sensex, of course, ended in the red. But what was shining bright today was the broader end of the market. So the Nifty midcap index hitting a fresh high. If you look at the advanced decline ratio, it was in the ratio of 2:1 on the NSE. The India VIX itself dropped somewhere around 10% to fall below that level of 15. But we were extremely volatile today because we started on the back foot. We regained momentum, but again it fizzled out, and we ended extremely flat. So sectorally, most of the sectors were under selling pressure. The likes of banks, pharma, FMCG, IT and metals, extending losses from yesterday. So these were some of the sectors or pockets that were under pressure. What did well was the entire auto pack. Most of the names on the Nifty on the gaining front were from the auto space. Energy and infra, these were some of the other baskets that saw some bit of buying interest. In terms of gainers on the Nifty, you had ONGC that rallied somewhere around 6% on the back of a positive report from Jefferies. You had other names like Adani Ports, L&T, Tata Motors, Hero. All of these counters were on the gaining end. On the flip side, you had stocks like Divi's Lab, Kotak Mahindra, Asian Paints, Dr. Reddy's, Reliance Industries, ITC, and some of the other pharma names like Sun Pharma were under pressure. Also metal names like Hindalco, JSW Steel were under pressure. But Yatin, lots of action in the broader end of the markets. 3 block deals, and there was a CBI raid on PNC Infratech as well.
Yeah. So a lot of things happening, Nandita. First of all, let's talk about the Nifty 500 gainers, wherein NBCC moved nearly 10% in trade, and the reason here was an order win. Various government departments gave them orders, post which the stock moved 10%. Railtel, and the management, while speaking to CNBC TV 18, did talk about bigger order wins, post which the stock moved 10% in trade. Ircon, also another railway stock, moved 10% in trade. PNC Infra, as Nandita was mentioning, some CBI related queries on the company, post which the stock fell 8% after communication to the stock exchange. IRB Infra as well as Honasa Consumer, which is Mamaearth, both of these stocks ended 5% lower in trade after we had a series of block deals in the counter. In fact, IRB Infrastructure, the deals happened at 350 odd levels, and the stock ended almost at 66 rupees. Indigo, which is Indiglobe Aviation, that stock also fell 4% in trade after the founder and promoter, the Bhatia family, sold 2% equity in trade today. So a whole host of stocks, wherein we are witnessing some block deals happening.
That's correct, Yatin. Spate of block deals, IRB Infra, Indigo, as well as Honasa Consumer, and stocks were clearly reacting to it. But the mid-cap index did fairly well to hit a fresh high in today's session. On that note, let's take a look at some of the stocks that were on our radar today, Yatin, starting with ONGC. PSU stocks, the kind of badgering that they saw on, the counting day, everybody was scared whether, PSU names will make a comeback or not, and they have managed to make a very strong comeback. In fact, ONGC today itself rallied somewhere around 6%. The kind of correction that we have seen on a stock like ONGC, according to analysts, particularly Jeffrey, they say that this correction is now overdone. In fact, this recent correction has opened up the way for a very good entry point, right, for some of these stocks. For ONGC in particular, Jeffries has reiterated its buy rating, target price of 390 rupees per share, which is, which indicates a 50% upside from yesterday's close price. Also, we know that, in the cabinet, in Modi 3.0, we've seen most of these, ministers retaining their berths, right? So Finance Minister Nirmala Sitharaman stays on, and Oil Minister Hardeep Singh Puri stays on. Right. Nitin Gadkari also stays on as Road and Heavy Ministers, ministry. So Jeffries has pointed out that this policy continuity is something that will bode well for most of these PSU names, and it will keep profitability elevated past vis-a-vis its past averages. In fact, Oil Minister has also pointed pointed out that ONGC will be, ramping up its production in the KG basin pretty soon, and they've also floated a tender to get an international tech partner for the same. So on the back of these comments and positive commentary from Jefferies as well, we saw the stock rally somewhere around 6%. In fact, in a recent note, Jefferies had also pointed out that the valuation for ONGC is at a steep discount vis-a-vis Nifty compared to the long-term average. So all in all, things boding well for a stock like ONGC. Also, there's chatter. In fact, even oil minister himself said that they will attempt to bring gas under GST, and this is something that most analysts say would be the biggest reform under Modi 3.0. So yes, things are boding well. Stocks have made a very strong comeback from recent correction. If you see from June 4th itself, ONGC was down 9%, Yatin. So yes, brokerages are saying that this offers a very good entry point in some of these stocks, especially ONGC. So that's what I mean. Tide is very much in the positive zone for some of these PSU names.
Absolutely, and PSU stocks are clearly rebounding quite strongly in trade. But when it comes to oil, it also boils down to sugar, because ethanol blending is something that the Minister Hardeep Singh Puri said that the Government of India will look at 20% ethanol blending targets to be met before schedule. Now, the most important thing is sugar stocks were firing up in trade. Any sugar stock you pick up in the mid to large sized ones, we had a 5 to 10% rally there. The reason being that the market now is expecting that probably from here on there could be some increases that will be given for ethanol, as well as there could be some export quota relief which will be given to the players. Now, before elections, we saw the ethanol policy being changed. B heavy molasses were only allowed, and the diversion from sugar production to ethanol production was banned, or probably there were some restrictions. Now Systematic says that they expect the clarity on ethanol feedstock usage as well as the pricing for ethanol, and the industry is also expecting that the FRP increase which was happening pre-election, that will be compensated by higher ethanol prices. Now the government is expected to allow additional diversion of sugar for exports. Last year we had the export quota coming in for the sugar companies, and probably that would mean higher realizations for the sugar company. Now, if you look at the quarterly conference calls also, players like Awadh Sugar are expecting that the sugar prices or the realizations would be in the range of 38 to 40 rupees per share. But Rampur Chini expects that the government might sooner or later allow the diversion of sugar for production of ethanol, because you also have the stable ethanol policy which will drive the investments in the industry. Dhampur also believe that there could be some good volume growth across branded sugar products, and Dwarikesh does believe that the sugar prices will start firming up from June of 2024, beg your pardon. So overall, sugar as a pack should be watched out for. Number one, probable ethanol pricing, as well as some policy change there is expected, and number two, the export markets shortly could be open for the sugar industry, since the prices in the international markets have come down, and probably the market is now started looking at sugar stocks.
Right, of course, we'll be watching out for more developments on the policy front. Of course, because ethanol blending through sugar was curbed due to global sugar shortages last year as well, and sugar, of course, sweet gains coming in there. But another stock that was in focus today, I think, was HCC. 20% gain coming in there, probably because Elara Capital has initiated coverage with a buy rating. In fact, it's the first analyst to initiate coverage on the stock. In fact, target has been pegged at 63 rupees per share, which indicates an almost 60% upside from current levels. Now, what is the reason behind Elara Capital going ahead and initiating coverage? Well, it's extremely positive on the company. It says that the company is poised to reclaim its lost glory, as improvement in financial health is something that will bode well going forward. In fact, it has also pointed out that the company is well positioned to capture the $1.5 trillion nuclear opportunity, and that's because of a few reasons. Its decade-old experience in executing in-house complex and marquee projects, 26% share of hydropower capacity, and 60% share in India's civil nuclear power capacity. So all this puts the company in pole position to to capture the $1.5 trillion nuclear opportunity. Aside of that, the company can now bid for new contracts after the recent credit rating upgrade and removal of restrictions on bank guarantee limits. In December last year, ICRA had upgraded HCC's rating with stable outlook due to a significant increase in the company's gross billings. In fact, even CARE at the start of this year had upgraded the ratings on HCC's bank facilities with a stable outlook. Of course, that was due to successful implementation of the debt resolution plan and regularization of the debt servicing as well. Now, Elara has pointed out that it expects inflows to the tune of 9,000 crores in FY25 vis-a-vis the company's guidance of 10,000 crore, and henceforth expects it to grow somewhere around 15% over the next 2 years. It also expects the company's net worth to turn positive in FY26, and it's optimistic that post that the company will move into a sustainable high growth phase going forward. And earnings wise also, expectations are pretty on the higher side. It expects the standalone revenue and EBITDA CAGR of 20% during FY24 to FY27 and earnings CAGR of 50% due to low interest costs during FY24 to FY27. Look at the stock, it has rallied somewhere around 100% in the last 1 year, Yatin.
Absolutely, and the stock of HCC clearly also benefiting because of infrastructure, tunneling work, as well as nuclear power plants. Few of the work that HCC does, is truly remarkable in engineering. We have the Bombay-Worli Sea Link also being built by the company, and also a few nuclear power plant opportunities would come in for them. So let's hope that the infrastructure story goes on for India, and a lot of players like HCC do benefit from this surge in the India infrastructure spending. With that, it's a wrap, and me and Nandita will join you tomorrow again on Closing Bell. But before that, 9 o'clock is when Nandita will tell you all the stocks to watch out for, as well as the stocks which could be making headlines tomorrow.
Well, thanks a lot for watching. Stay tuned to Moneycontrol for all your other news and updates.